Hello and welcome to Policy Watch. Let's take a look at this week's top headlines. September IIP data disappoints. Consumer durables and consumer goods drive the decline. The rupee breaches the 55 mark. Yet again, calls for strengthening the rupee resume. Cabinet to meet amidst growing concerns of a yawning fiscal deficit will discuss steps to reduce the fiscal deficit. Automakers rejoice this Diwali with bumper sales. Bike and two-wheeler segment also makes a killing. Those are the headlines this week, and my guest this week is Mythili, Bhusnurmath, consulting editor with the Economic Times. Welcome back to Policy Watch. Mythili, we'll get into our first story right away. Despite the Prime Minister's brave stand and his defense of his government's economic achievements, September has failed to cheer industry as the index of industrial production, or IIP, slipped to a negative 0.4%, disappointing markets as well. Capital goods played truant this time, falling to a negative 12.5% from a negative 6% in the year-ago period. Meanwhile, August IIP2 was revised downwards from 2.7% to 2.3%. Here's a report. Take a look.
India's industrial output contracted on weak consumer demand in September, according to the data released by the Central Statistics Office. The slump is expected to add pressure for action by the government, with India poised to put the slowest growth in almost 8 years. According to the data released by the CSO, electricity grew at just 3.9% as compared to 9% this month last year. Basic goods grew at 3.5%, capital goods at 12.2%, and consumer goods at 0.3% as compared to almost 6% last year. Manufacturing output that contributes about 15% to overall GDP fell 1.5% in September from a year ago.
In the current financial year, our export performance has slightly improved. We are down by 1.6%. Our Director General of Foreign Trade has been having extensive consultations with the relevant stakeholders. What specific steps the government needs to take for ensuring export performance is improved and trade deficit is curtailed.
The disappointing numbers will also add weight to the case for an interest rate cut by the RBI in its next meeting in January. The RBI on its part has maintained that any interest cut is highly improbable since it expects price pressures to remain elevated following a hike in the price of heavily subsidized diesel in September. Bureau Report, Rajya Sabha TV.
There you go. September fails to cheer up industry. Now, the reason, Mythili, for the contraction was sluggishness in manufacturing, down 1.5%, capital goods down minus 12.2%, consumer goods minus 0.3%, and consumer durables minus 1.7%. In real terms, the September IIP decline wiped out any gains made by the previous 2 months. Meanwhile, August IIP also has been revised from 2.7 provisional to 2.3 now. No cheer for industry this Diwali at all.
Well, it was a pretty cheerless Diwali, Athar, because not only IIP figures, but we saw also export figures decline and we saw retail price inflation go up. So I think for the government, and now we've had yesterday news about the telecom auction. So I think it's been a pretty cheerless week. The only consolation, perhaps, if at all, you can say that was in the WPI figure which came up, which showed a slight easing in the inflation rate at the wholesale level. So it's been a pretty bleak IIP number, certainly, as particularly manufacturing decline is very, very disappointing. But the only perhaps real hope that one can perhaps hope for while we wait for next month's figures is that possibly the shift in the Diwali, because normally it happens in October and this year it was in November, and usually companies start stocking up for the higher sales, which invariably take place in the festival time later on. So possibly the dip that we see in September may be made up by October numbers, because usually we see a spike because of so many of our purchases, particularly of consumer durables and consumer goods, are linked around our festivals. So that is perhaps the only ray of hope. But overall, the picture is certainly very bleak, particularly given that even though the August figure did show a slight improvement, that has not been consistent. If you look at our IIP numbers, in fact, this has been a criticism of our IIP data, that it looks more like the Sensex.
Right.
It doesn't show any consistent trend either upwards or downwards.
Right.
So the only hope is now, if it's like the Sensex has gone down, maybe it will go up, particularly since Diwali Diwali is next.
That is what we were hoping for. But the overarching reason, would you say, is because Diwali fell in October? Would you say that's the overarching reason, or are there other factors at
No,
work?
certainly there is a deeper slowdown, undoubtedly. But that deeper slowdown might have been accentuated, aggravated by the change in the festival month. Otherwise, certainly there is a structural problem, particularly if you see manufacturing. And the reason why manufacturing decline is even more worrisome than the decline in other numbers is because if you want to move people out of agriculture, which is what we certainly want to do, because all said and done, the share of agriculture in GDP has come down, but the share of labor, of people dependent on agriculture has not come down. So the only way forward, if we want to lift millions out of poverty, which is what we certainly want to do, is to give people jobs in some other sector other than agriculture. Now, you cannot take people out of agriculture and put them into services. It calls for a higher degree of skill, which people don't have at the moment. But manufacturing, blue-collar work is where you could possibly absorb these thousands and thousands of people from agriculture. So if manufacture does not provide the jobs, then we're into serious trouble, not only from the economy perspective, but also from the social and political aspect, because then you're going to find the unrest spilling over into much, much larger parts of the country than you have today. Right. So I would look at the fall in manufacturing much more, with much more anxiety than the fall in IIP overall. I think that's what we really need to focus on. The government does have a national manufacturing policy, but unfortunately, the problem in India is that we have so many blueprints, excellent blueprints, but somehow when it comes to implementation, when it comes to delivery, we seem to always fall short. Yeah. So I think that's where we need to focus on.
Of course, blue-collar workers, the assimilation of those people outside agriculture, of course, important. Also, analysts have started saying, Mythili, that September data strengthens the case, strengthens more the case for a rate cut by the RBI. But if you look at all the parameters, say export numbers or the core sector growth, etc., it appears that the Reserve Bank has very little elbow room to actually cut rates. And in its subsequent policy meets in January, the first one is happening. Your thoughts on that? Does the RBI really have any room?
Well, really not much, given that inflation numbers are still quite high. And actually, when you mentioned core sector numbers, September is a very strange month when core sector growth was quite satisfactory, and yet the IIP fell. So I think there really is a lot of lacuna and there are a lot of problems with the IIP data itself. But having said that, certainly you can't dispute the fact that the economy is slowing down. At the same time, since inflation still remains very high, we still have to see whether the October fall in the WPI and the wholesale price index, 7.45 from 7.8, if that trend continues, then maybe the Reserve Bank will have a little bit more elbow room. Right. But that requires the government also to play ball. Government has to cut its expenditure. But given the fact that wherever the government turns for revenue, whether it is disinvestment, where we've got nothing so far, telecom auction, very disappointing, then where does the government spend from? And we have elections coming. So the government does want to distribute freebies also. So we are going to get no cooperation from government, then the RBI's hands are tied.
Two quick questions before we move on to the next story. The PMAC Chairman Rangarajan has said that he expects inflation to decline by December end. What is your take?
Well, hopefully, because it's a seasonal factor. In winter months, vegetable production, production of milk, production of many other things, agricultural commodities is much better. So certainly there is a hope that seasonally itself you see a decline. So I think that is certainly quite likely.
Right. One last question on this, China. Let's discuss China for a bit. We've fallen behind China. Lagging is the word, if I could use that. China clocked, Mythili, a 9.2% industrial output annual growth in September and is expected to do better in October as well. Does that mean that they're handling the global slowdown much, much better than we are?
Well, I think it's a little unfair to make that comparison because China has certain advantages, quote unquote, and I'm very important to emphasize the quote unquote, that the government can move ahead regardless of the people's wishes. Whereas in India, in a democracy, you really can't. Way, FDI in retail, look at the kind of controversy it's created. So in a democracy, you have to take the people with you. And I think that is a more sustainable way of going because with the change in leadership in China, really nobody knows, will China implode or not? Certainly India, nobody will think about our imploding. We may go slower, but there's no question of India imploding. And I think that's the better way to go. I don't think any of us is willing to give up our democracy.
Absolutely. On that note, we'll take a small break. We'll discuss the rupee and its slide further after the break. Don't go anywhere. More with Mythili Bhusnurmath. After the break, after this small break, we'll discuss the rupee breaching the 55 level. Don't go anywhere. Policy Watch returns after this break. Welcome back to Policy Watch. Now, the rupee fell to its lowest level in nearly 2 months and breached the 55 mark on Monday after data showing a record trade deficit and contraction in factory output stoked concerns about economic growth. The rupee ended at rupees 54.88 against the dollar compared with last Friday's close of 54.79 against the dollar. Rupee's fall to as low as 55.13 has wiped off all the gains sparked by the government's announcements of a slew of fiscal and economic reforms in mid-September. The measures had taken the rupee to as high as 51.32 against the dollar on October the 5th. The currency has steadily slipped since then as investors have resumed their focus on an economy growing at its slowest pace in almost a decade and on a very slim chance of an interest rate cut by the central bank. Now, Mythili, why the sudden fall? Is it the trade deficit? Is it the weak economic data? Or is it a mixture of both?
Well, Athar, to start with, I think we shouldn't get so distressed about the weakening of the rupee because there are two sides to every coin, really, literally speaking. So just when the rupee depreciates, yes, it's bad news in terms of inflation, it's bad news for importers, but exporters certainly gain. And if you look at our trade deficit, yes, it has widened to a historical high, you can call it $21 billion, but the fact is that when the rupee weakens, it gives more push to our exports. So if in the process our exports can look up because they've been falling steadily, 6 months there has been a decline, October was the 6th month of decline. So if exports look up and our trade balance improves somewhat, then maybe the weakness of the rupee would not be such a bad thing. Having said that, certainly our macroeconomic fundamentals are weak. And at the broader level, yes, the fall in the rupee does reflect the weaker macroeconomic signals. At the same time, the fact remains that the US, the EU and Japan, all these countries are flooding the world with liquidity.
Right.
This money has to look for some kind of shores. And some of this money will come into India despite our poor economic performance. So I think one need not attach too much importance to a temporary weakening or a temporary appreciation. What we really need to worry about is what is a sustainable level of our current account deficit, and will we be able to finance that? So we need to look at more sustainable flows, which is why it is worrisome, because a lot of the money which is coming in is portfolio flows, which is easy come, easy go. We need to look for more foreign direct investment. Now let's see what happens when Parliament reassembles, because the government has to pass certain amendments to the FEMA, the Foreign Exchange Management Act, and only then can foreign direct investment come in, if at all, assuming people are interested.
So you're saying that you shouldn't be really worried too much about the rupee falling because there's,
some plus also to it, as long as it does not fall precipitously.
Absolutely. My last question on this particular story, investors are now worried about, and this is what analysts are saying, investors are now worried about the slowest pace of growth in almost a decade and the slim chance of a rate cut by the RBI. RBI has made it clear that it will not interfere in the forex market. It is not their job to do so. So what then, in this case, is the short-term outlook for the rupee, according to you, till the next quarter?
Well, short term, it's very difficult, first of all, to put any money on betting on the rupee, first of all. So having said that, yes, short term, it may decline, but depending on flows, it may go up also. So I think the RBI step saying that we will not intervene is right, because they've always said that we will intervene to curb volatility, but we will not target any specific rate. So I think what matters is, as long as the rupee does not fall precipitously or rise abruptly, a steady pace of up and down is part of the modern day world, where volatility is part of the business of the world today.
Do you think the RBI will in fact cut rates in January? They have signaled that they might perhaps do a slight cut.
Well,
but do you
he
think
has already said that we may do it if there's room. And certainly if the October number is reinforced again in November and December, I think there is reason to hope. But that's not a magic bullet. Let's hope. Put it very clear that even if you did cut interest rate, it's not as if it's going to be a dramatic improvement in import. That calls for much more. But to the extent that even 5.8% is not a very bad performance in a world where overall growth is slowing, I think one doesn't need to get either excessively pessimistic. At the same time, yes, there is cause for concern.
so? No serious concerns for the government right now, because the rupee hasn't really fallen precipitously, like you said.
Well, I would think the concerns for the government are not so much on the rupees front as on the fiscal deficit front. That's where they have a serious problem, because revenues are not growing and your expenditure meanwhile is mounting. So I think the worries for the government on the fiscal deficit front is much more, and that in turn spills over onto your current account deficit. So it's a combination.
Time for one more break.
Question.
Mythili will go into our third story after that. Take a short breather, come back. Policy Watch returns on the other side. Welcome back to Policy Watch. India's auto industry got a pleasant surprise this Diwali as car buyers thronged showrooms to avail Diwali offers. North and Central India trounced sales figures across the country, helping the industry record its highest retail business for any single day in the festive season in the past 2 years. Here's a report. Take a look.
This year, that festive feeling was given a new meaning as car buyers rushed to showrooms before Dhanteras. Automakers bypassed their sales target and posted about 20 to 25% higher deliveries over the same period last year. India's largest car makers, Maruti Suzuki, sold over 10,000 cars on Dhanteras, increasing their deliveries by over 19% this festive season. Automakers attribute the sudden spike in sales to a renewed interest in new petrol models in the market, as well as a strong continuing interest in diesel cars. A steady build-up in consumer interest since the festive season kicked off with the Navratras last month also explains the 33% spiral in passenger car sales in October. The deliveries of utility cars jumped by 87% compared to the same period last year. In the bike and two-wheeler segment too, Diwali brought some cheer, with India's largest bike manufacturer Hero MotoCorp selling over 1 lakh bikes and scooters on Dhanteras. Its best-selling model, the Splendor, even crossed the 40,000 sales mark for a single day. The auto industry hopes that renewed interest in petrol models will propel them towards double-digit growth, as the slump in the auto sector in the past 9 months was largely attributed to the absence of any enthusiasm for petrol-powered vehicles. Bureau Report, Rajya Sabha TV.
So, bumper Diwali for automakers, but is it really a good sign for the auto industry? Is it like really a one-off? We have Jagdish Khattar, former chief of Maruti Suzuki, now has his own company, Carnation, which he founded. Welcome to the show, Mr. Khattar. First time on Policy Watch. What do you really attribute this sudden boom in car sales and two-wheeler sales this Diwali? Is it really a renewed interest in petrol models that is really driving this growth?
See, let me put it this way, many a times we tend to get carried away by 1 month, either in the positive or in the negative. One has to see the trend as far as sales are concerned, as far as customers' response is concerned, over a period of time. Having said that, yes, October was good, and there is reason for it. In October, if I remember correctly, your Sharad was in September, so October was not there. There are some Octobers in which both of them are there, so it gets diluted. Yes, earlier months the sales were slow, so there was a pent-up demand. See, new models were there. Models from Mahindra, Alto from Maruti. And once a manufacturer like Maruti, when they introduce a model, they sell within a month, 2 months production, because that's what they accumulate before it is launched, so that spread is there, availability is there. Now, yes, October festival season, customers were shy, they were not going to the showroom, they all came there, the atmosphere was a little better, environment was a little better, so everything contributed to it. And let's also keep in mind, Maruti has increased its diesel production. Maruti had a low base last October. So if you have a low base, obviously the growth would be much more. And yes, petrol cars were sold because Maruti, if they sell all the Alto they have produced, the petrol percentage will go up. So, short point I am making is, yes, October was good. One feels very nice it has taken place. But if one were to say that, yes, they are back, I would keep my fingers crossed. We need to see a couple of months.
Right. But Mr. Khattar, auto experts, if I could call them that, are saying that this is perhaps just a one-off thing and only because the Diwali season and the festive season this happened. But during the past year, at least the past 8 months, the automaker segment, the auto industry has really been lagging. Could perhaps that diesel hike that the government announced be one of the reasons why car makers were lagging behind in sales? Would you say that?
Yeah, that's why I'm saying that immediately they were smiles because this was there, and on Dhanteras you had Maruti announcing 10,000 retails, etc., etc. So yes, things were very good, and after such a bad phase, it makes them feel nice. But as you mentioned, sustainability is important, and even if you were to go into October, I think more analysis is required. Did everyone do well? I don't think so. One, you look at the overall market. Yes. In overall market, did everyone have their share of the pie? I don't think so. So, you will find some manufacturers not so bullish even in October, and they are hoping that Diwali would be better. So, coming back again, it would vary from manufacturer to manufacturer. It will vary from product to product, and till such time that the pie increases, there is a good growth and everyone is able to share that, I think then we will say it's sustainability. And yes, if the growth is not going to be more than 5, 6, whatever people are saying, so obviously there would be an effect on the automobiles.
Right. My last question to you, Mr. Khattar, of course, what more does the government really need to do to give a boost to the sagging, if I could call it that, the auto industry? Automakers have a big wish list that they want the government to actually act upon. But what more can the government, or what should the government be really doing to give a fillip to the auto industry right now?
Well, yeah, I'm getting an opportunity of raising a proposal which was raised 6, 7, 8 years back. Mr. Chidambaram was then the finance minister. His first reaction was very positive, and I thought it was a win-win situation for everyone. The industry had given a proposal, I think sometime in 2005-6, that in India you have extreme type of cars on the road. You have very old cars, even with carburetors, and you have Euro 3 and Euro 4. If you look at the airlines, an airline is known by the average age of fleet, how many old years the fleet is. In India, it can be from 20 years to a year. Unfortunately, in India, we don't have a scrapping policy. Overseas, after 2 years or 3 years, a car owner has to go for certification, safety and emission certification every year, so that the quality of car is maintained. In short, because we do not have certification, annual certification, we have cars on the road which have outlived their utility, they are adding to emission, and it is much better that they are scrapped and replaced by new cars. The industry had given a scrapping policy to the government, saying that even though there is no law for scrapping, let it be voluntary. In the sense, it's voluntary that anyone whose car is over 10 years, 12 years, 15 years old could exchange that for a new car. The old one could be scrapped. And the new one, because it's a part of an initiative, the government in terms of excise, the state government in terms of VAT, and manufacturers in terms of their margin could make that into an attractive offer to the customer. And I think it's not only for the cars, it's very much relevant for the goods trucks. If you go on the highways, the quality of some of the trucks is so horrible, they are adding to the accidents, they are adding to emission. I think this is one of the things that could be done.
Thank you, Mr. Khattar. We'll have to see where that proposal really goes. Thank you very much for joining us on Policy Watch. I must also thank my guest in the studio, Mythili Bhusnurmath, for coming and joining us on Policy Watch today. Our first story on Policy Watch this week was the weak IIP data that came out. Of course, there are many structural issues there, like my guest in the studio said, but perhaps it becomes better in October and later months. Inflation is also expected to decline, like the PMEAC chairman Rangarajan has said. We'll have to see really where that goes from here on. And our second story this week on Policy Watch was the rupee breaching the 55 mark again. There are calls for strengthening the rupee. Again, the RBI has refused to intervene, and rightly so, in the forex markets. My guest in the studio, Mythili, believes that we shouldn't really be too concerned about the rupee falling that much. It, of course, will fall because there is a global slowdown happening. But what we need right now is more FDI flows and not just portfolios flows. Like Mythili said, they're easy come and easy go. More FDI needed and shouldn't really be too concerned about the rupee falling. Our third story, of course, was the big bumper Diwali that automakers had this year. Like my other guest, Jagdish Khattar, said, we have to look at other data, not just one month's data. We'll have to look at the October data and the November data and the previous data, of course, as well. But right now, of course, automakers are rejoicing. They've had a bumper Diwali. That's all we have on Policy Watch this week. Till next time, Athar Khan saying goodbye, good night, and thank you for watching.